The Aussie dollar comes under pressure despite strong commodity prices, but it's not all bad news. Investors prepare for today's Reserve Bank meeting where the official cash rate is expected to rise by 50 basis points, and why phone bills are set to jump. It's Tuesday, the 5th of July, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Are you ready for the Reserve Bank meeting?
Oh, I actually am. These things are actually becoming kind of blockbusters, cliffhangers, really.
Well, for years, the Reserve Bank did nothing. Basically, just kept interest rates on hold. Not much happened. Then we had the pandemic and they dropped them very quickly. Then we had another couple of years and not much going on. And now the Reserve Bank, centre of attention again, lifting interest rates. I tell you what, if you're the Reserve Bank governor, this is sort of the time. I mean, he has come under a lot of criticism, so we better be a bit careful here. But this is probably kind of a good time to be running the economy in many ways.
Yeah, and especially when the consensus is that it's going to be another big rise, 50 basis points. That is going to have everybody watching the announcement at 2:30 this afternoon.
Sure will, Michael.
Now, you've got an interview coming up after the show with Michelle Deaker, the founding partner and managing director of One Ventures, about venture capital investing.
Yes, with so much going on in the markets at the moment, we thought it'd be a good time to check in on that side of investing, venture capitalists. Much higher risk, so you think it might be a bit tougher for venture capitalists, but also this sort of environment creates opportunities, and Michelle walks us through all those facts.
Yeah, that's coming up a bit later on. But the main story this morning, Sean, the Aussie dollar is getting plenty of attention at the moment. It's trading just above 68 US cents, though most economists think it should be higher. But against currencies apart from the US dollar, it isn't faring too badly.
That's right. Given the high commodity prices, notwithstanding the drop in recent weeks, the currency has been an underperformer, certainly against the US dollar. A month ago, it was closer to 72 US cents. Now, the key reason for that underperformance is because the currency is highly leveraged to what happens in China. If the world's second largest economy accelerates, it buys more iron ore and other goods from Australia and needs Aussie dollars, and the currency appreciates. But China remains weak, even if commodity prices are relatively high. Also, the Aussie is suffering from the strength of the US dollar. The greenback is considered a safe place for investors to park their money. But if you look beyond the greenback, the Aussie dollar has appreciated against the British pound, for example, while it's depreciated against the euro. Against the yen, it's been up and down, and against the New Zealand dollar, it's trended higher. In fact, against a basket of currencies weighted by how much Australia trades with different countries, that's known as the trade-weighted index, the Aussie dollar is well below where it was 3 months ago, but not much below the trend of the past 5 years. It's quite a bit higher on a TWI basis than what it was late last year. So while we see it against the US dollar as performing poorly, it's actually not doing too badly against other currencies.
All right, so that's kind of what's happened. Where's it going?
Well, the consensus view is that the Aussie dollar will be higher against the greenback by the end of this year. From my experience, Michael, market economists are continually optimistic about what the currency is doing. They believe it will be better than what eventuates. Some people think it'll even get to about 80 US cents by the end of this year, and that's very much on the back of commodity prices. So we kind of think about needing and wanting a higher US dollar, but a weaker Aussie dollar is actually really good for the economy because it makes our exports relatively cheaper and therefore more attractive to overseas buyers, and imports become more expensive, so we here in Australia look for locally produced goods to buy. Of course, it's not so good for overseas travellers, particularly those going to the US. That's much more expensive, but maybe it's time to go to the United Kingdom where things are relatively cheaper. So it's a big mishmash here. The Aussie dollar is certainly weaker than it's been for a while. The long-term average against the US dollar is a little bit above 70. It's closer to 72 cents, so it's below that. But against all other nations, it's actually not faring too badly.
Sean, I don't mean to accuse you again of too much self-interest, but is it any coincidence that you've just returned from Hawaii? You probably got a few US dollars to change back into Aussie dollars, and suddenly you thought, I think I know what the lead story is today.
No coincidence whatsoever.
Okay, all right, sure. All right, how did local equity markets perform yesterday?
It was a pretty good day. The S&P ASX 200 rose more than 1% to 6,613 points by the close, led by gains among energy stocks and real estate companies. Santos jumped 3.3%, while Woodside Energy finished 2.7% higher. Among the real estate investment trusts, Goodman jumped 2.8%, and Dexus and Scentre Group rose 2.3%. All the major banks did pretty well, rising around 1%. CSL jumped more than 2%, while Wesfarmers was 2.5% higher. BHP ended down 0.4%. Now, the best of the top 200 was biotech Imugene, up nearly 13%. It certainly jumps around a bit, that one. The worst was fund manager Magellan Financial. It dropped 10% after a senior manager said he'd retire next year. Gaming group PointsBet was another poor performer, down more than 6%. And Michael, of course, Wall Street was closed overnight for the 4th of July holiday.
All right, we'll be back in a moment with the rest of the day's business news. Sean, it is, of course, all about the Reserve Bank meeting today. The widely held view is that the central bank will lift interest rates by 50 basis points today. That'll take the cash rate to 1.35% and standard variable interest rates to around 5.5%.
Of course, Michael, if home borrowers shop around, they can probably get a better deal than that 5.5%, but no doubt repaying the mortgage is getting a lot more expensive, and it will keep going that way. The Reserve Bank Governor, Philip Lowe, has already hinted that a cash rate of about 2.5% is close to neutral, and so if the bank wants to get to more neutral settings to help keep a lid on inflation, then that's where the cash rate is going. That won't do much to help equity markets, but if banks start passing through higher rates to deposit accounts, there'll certainly be plenty of pensioners happy about the increases. The announcement comes out at 2:30 this afternoon, and of course we'll be talking about it, I would say, in some detail tomorrow morning, Michael.
I suspect so. Now, Sean, Prime Minister Anthony Albanese's trip to Kiev has been welcomed by Ukrainian officials as an important signal that the West is standing up to Russia.
Mr Albanese ended up travelling by train to the capital. It was the safest way for him to get there. He promised another $100 million worth of military aid, including 12 armoured personnel carriers and 20 Bushmasters. Now, I didn't have any idea what a Bushmaster is, but apparently they're used to deploy troops very quickly. Australia's military aid now totals $338 million. Ukraine's ambassador to Australia said President Volodymyr Zelensky was extremely happy to see Mr Albanese and characterised the bilateral meeting as very good.
Sean, isn't it interesting that we talked about, obviously, the Prime Minister's visit to Ukraine yesterday morning, but he only arrived back in Poland yesterday afternoon, and the entire trip was supposed to be under a bit of a media blackout. And no one in Australia would have known about it if it wasn't for the governor of Kiev actually posting about it on Facebook, and then international media picked up, and then all of a sudden everyone in Australia goes, all right, well, if everyone else is doing it, we can too.
Yeah, so the media would have known about it, but embargoed it, so effectively agreed to keep it quiet. And it was surprising, I think, that so much news came out while he was in the country. It certainly, raises safety concerns for him.
Yeah, it absolutely does, because the media embargo was at the request of the Defence Force, really just for security purposes. So all of a sudden, when the Kiev governor's posting about it and posting pictures on Facebook, it probably compromises that security just a little bit. Now, Sean, we also talked yesterday about the Prime Minister's visit to France, and that country's ambassador to Australia yesterday said that his nation trusts Australia under the Albanese government following what he called the unfortunate events of last year.
That, of course, is when Australia tore up its contract with France to manufacture submarines. Yesterday, French Ambassador Jean-Pierre Thibault said both sides were committed to the Indo-Pacific, and Australia's stronger emission reduction targets had also paved the way for collaboration on renewables and emerging manufacturing activities. He hinted that there's something in the pipeline along that, but we'll have to wait and see about that.
Now, Sean, the east coast of Australia is getting absolutely hammered with some torrential rain at the moment, but yesterday we got an estimate of how expensive the La Nina weather event over the past year has been for one of the country's biggest insurers.
Suncorp reported that last financial year it dealt with 35 separate events, in more than 120,000 natural hazard claims at an expected cost of $1.1 billion. Now, that's the cost to Suncorp. It has reinsurance, which is effectively an insurer taking out its own insurance policies, and that will cover a big chunk of the total bill, but to Suncorp, it'll be $1.1 billion. CEO Steve Johnston said much needs to be done for Australia to become more resilient to natural disasters, and he did commend, though, the progress from the federal government's $200 million a year Disaster Ready Fund and also Queensland's Resilient Homes Fund, but the industry is pushing for more help in ensuring that we are more resilient to the sorts of things that are going on at the moment.
And Sean, what's the latest on the current flood crisis?
Well, it isn't good news in New South Wales, with the state's Emergency Management Minister Murray Watt saying around Sydney flood levels are as bad as earlier in the year. SES crews have been performing non-stop rescues around Greater Sydney with people trapped in cars and homes as waters rise faster than during March. And also there's a stranded tanker ship off the coast of southern Sydney, which has no power due to the storms. There are real fears that it could run aground, and plans to rescue the crew have been pushed back until at least today. Now, hopefully that will occur today, but there's no certainty about that either. Parts of Sydney have received more than 4 times the normal July rainfall in just 48 hours.
Yeah, it's pretty extraordinary. Now, we've spoken plenty about rising petrol prices and about higher energy costs in recent months, but phone bills are also rising, and that's likely to cause a shift in customer behaviour away from major mobile carriers towards budget operators.
Yes, the telco industry is growing again after 18 months of contraction during the pandemic, and the big carriers are lifting prices, according to a report in the Financial Review. Telstra has already lifted the price of its mobile phone services by between $2 and $4 a month. A new report from telco research group Telsight says the 2 other majors, Optus and Vodafone, are also in position to lift prices, particularly as people move on to 5G. Now, the study found that 17% of customers already use what are known as mobile virtual network operators, effectively smaller players who use the physical networks operated by the big 3, but then sell to customers. Now, that figure's been rising since about 2019. Telsight estimates that there are 37 million services in operation. That's basically mobile phone accounts in Australia. That's up 1.1 million over the past 6 months or so. 37 million mobile phone accounts. That's like, what, 1.5 per Australian?
Yeah, that is a lot of phones.
It's a lot of phone numbers.
It certainly is. So very good observation there. Sean, one of the more tumultuous takeover bids this year has been Canadian group Dye & Durham's bid for Link Group, the superannuation administrator and share registry operator. Link yesterday rejected the Canadian group's $4.30 a share offer.
Not surprising, given last week Dye & Durham cut its bid price from $5.50 to that $4.30 per share. It cited rocky financial markets and competition regulator concerns, though there's been plenty of speculation that the bidder wasn't quite as enthusiastic anymore. Anyway, that speculation sent Link's share price from above $5.50 earlier in the year to as low as $3.35 in the middle of last month. It's recovered somewhat, though was down just a touch yesterday to close at $3.79. In its statement, Link said it will keep talking to Dye & Durham, so the deal isn't totally off the table, but certainly it's a wobbly table.
All right. Now, Sean, a Melbourne aged care home where 45 people died from COVID-19 has been charged by WorkSafe Victoria.
St Basil's Homes for the Aged were charged with 9 breaches of the state's Occupational Health and Safety Act. The regulator alleges that in July 2020, after it was notified that a worker tested positive to COVID-19, St Basil's failed to make workers wear personal protective equipment. It also alleges it failed to train workers adequately and verify that staff were competent using protective equipment. Now, 94 residents and 94 staff ultimately tested positive for coronavirus, and tragically, 45 people subsequently died.
A couple of shorter stories. Sean, there was a jump in dwelling approvals during May.
Yes, approvals were up 10% thanks to a steep rise in approvals for apartments and units. Houses, or house approvals at least, fell. Western Australia, Tasmania and Queensland led the way. That's according to the Australian Bureau of Statistics.
And the value of new housing loan commitments rose 1.7% to $32.4 billion during May.
Yes, there's still plenty of people taking out loans to do renovations or buy investment properties or new homes. Self-interest here too, Michael. While we feel that the construction sector is struggling, loan commitments are still well above levels of recent years.
Sean, self-interest Aylmer. It's got a certain ring to it, doesn't it?
Yeah, I like it.
Of course you would. It's about you. Now, moving on to overseas news, Sean, Beijing is racing to stamp out a new COVID flare-up that risks one of the country's most significant economic regions.
Yes, this is a worrying story. Infections have surged in the eastern province of Anhui, with nearly 1,000 coronavirus cases reported since late last week. Towns in the region have been locked down. The province is next door to Jiangsu, which is the second biggest contributor to China's economic output, according to Bloomberg. It's a global hub for solar panels, medicines and semiconductor chips, and some towns in that region are already reporting a lift in cases. Now, a shutdown in Jiangsu could lead to major global supply chain problems.
Now, Sean, this next one is pretty extraordinary. Wirecard was a high-flying German tech company which collapsed in the middle of 2020 and one of the biggest ever collapses in Europe. Now its former head of accounting has admitted to forging documents requested by its special auditor KPMG.
Yes, we haven't heard as much about this, but it's kind of like the Enron of Europe in recent years at least. Wirecard fell into insolvency after admitting half of its stated revenues of nearly 2 billion euros a year didn't actually exist. The former chief accountant is one of 3 executives charged with fraud, breach of trust and market manipulation. Until now, he's denied any wrongdoing, but according to the Financial Times, he's now conceded that he forged a report for KPMG, who had been appointed as special auditor. He did say it was a one-off, and he is one of the 3 executives that are due to stand trial later this year, but really extraordinary revelations that the chief accountant would actually forge something for the auditor.
Yeah, it certainly is. Now, Russia says it has seized the entire Luhansk region in Ukraine after weeks of brutal fighting, which is really a significant military victory for Vladimir Putin.
Yes, it is. More than 4 months after invading Ukraine, Russia has made the significant step of, as Moscow puts it, liberating the last stronghold in the Luhansk region in the east of the country. It marks the first time Russia has established full control over a Ukrainian region since the early weeks of the war in March. Michael, it's a slow grind, but Russia is making headway in Ukraine.
Yeah, it seems that way. All right, now, Sean, up next is the Fear and Greed Daily interview with Michelle Deaker.
That's right. As we mentioned at the top of the show, it's all about venture capitalists and what they're thinking about in these uncertain market times. Great chat with Michelle.
Yeah, it certainly is. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 5th of July, 2022. Make sure you're following the podcast and, of course, join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.